Welcome to another Wall Street Informer production on WSI TV.
Welcome back for another Friday edition of WSI TV. I'm Jordan Bishop, that's Sean Bauer, and today we're going to show you the rich man's secret to doubling your money.
Yeah, we're really talking about a mentality here when it comes to trading and investing, and looking at a particular stock and seeing it as either overbought and expensive or strong, or looking the other way and seeing it as a discount price or a weak stock. It's something that can be the difference between doubling your money or missing out on that extra profit, getting half the profits that you should. And while this pertains very well to individual stocks, it also works for the overall market, doesn't it, Jordan?
Yeah, definitely. Just as a prime example, back in December of 16 and January of this year, we were waiting on the edge of our seats for the Dow 20,000. This took about 3 weeks to finally break the 20,000 point mark. But you know, that's when investors and market experts started saying that the Dow was overbought.
Yep.
It was too expensive. It was going to snap back. Now, if you stopped trading back then, or if you started short selling back then, you probably know you'd be in a pretty dire situation right now, because since then the Dow has gone up 8.7%. It's had more than 24 new all-time highs within 6 months.
Yeah.
But you know, I mean, that's great. The Dow is a great figure to look at, but tech stocks really have impressed even more than that. You know, the Nasdaq has hit 45 new all-time highs this year.
Yeah.
I mean, that's just ridiculous. In a little over 6-7 months, 45 new all-time highs. It's crazy.
Yeah, that's right. And it just comes down to looking at the market as strong instead of overextended or something
Exactly.
like that. But like you alluded to, I mean, with individual stocks, something like Amazon, it looked crazy expensive whenever it was just over $500 a share. It looked overextended, it looked overbought, and a lot of people were calling it that and starting to even short it. Now it's well over $1,000 a share, double what it was at that point, and just a pure example of how this mindset of seeing something as strong whenever it's in that, like an upward trend or something like that, seeing it as strong instead of overbought and expensive earns you double. The same thing happened with Facebook. It looked overextended, looked really, really expensive at $70 per share, now up over $165 per share, I believe. So just another instance of more than double your money by using that. And of course, this works in the other direction as well, Jordan.
Yeah, definitely. If we look at JCPenney, you know, it was sitting at $42 some years back.
Yep.
It went down to $13. Now, many people might have looked at that as cheap, as a discount stock.
Yeah, it's called a value stock by a lot of people.
Exactly. Yeah. So, I mean, if you would have bought that at $13, you would have cut your capital in half, because it's now under $6.
Yeah.
So a stock that looked cheap to you know, the average investor was actually extremely weak.
Yeah, that's right. I mean, again, it's looking at the trends, using guidelines, you know, trend lines upward or downward depending on which way the stock is moving, or the market, of course, as we mentioned. And you need to let the stock show you whenever it's done being a strong stock. You can call it expensive all you want, but it's not really done being strong until it breaks that upward trend, until it breaks something like the 200 daily moving average. And the same way works in the opposite direction for weak stocks, something that can be called discount stocks, until they finally break that trend. So don't try to outsmart everyone. Don't try to outsmart stocks or the market. The market's going to win 99% of the time. So let the individual stocks do that for you.
Yeah, exactly. And this is exactly how we use the rich man's secret to double our money. You can do the exact same thing for yourself by following these simple rules. On that note, Sean, have you got any final notes?
Yeah, just, you know, as you're using this idea, this mindset that we use the 200-day moving average as, I guess, your base guideline. That's going to lead you in the right direction the vast majority of the time. Something over the 200 is strong. Something under the 200, consider it weak. Yeah,
I won't look at a chart without plugging in the 200-day moving average,
that's
for
right.
sure. Well, thanks for being here, Sean.
Of course.
We'll see you next time.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com, where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.